Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, November 19th. This will be a technical analysis breakdown. So if you're somebody that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used to help make good decisions as a trader, this will be a video for you. Before I get to the actual stocks, real quick, I want to personally invite you to a free live online class that I'm actually offering this evening, depending on when you watch this video. So if you want to learn more about the tool that I'm about to talk about and how it can be used to build consistency as a trader, then definitely get signed up for the class. However, I do realize that people have lives, people have schedules. So if this is too last minute for you, or who knows, maybe you're watching this on Friday morning, then the event will be recorded. So after it's done and uploaded, I can email that out to you. So just drop me an email, clay at claytrader.com, and I would be happy to send you a recording of it. So keep that in mind. But if you can join, then yeah, you can sign up. There's a link down below in the description box. If you're watching on YouTube or if you're watching at my site, then somewhere right there on the webpage, you can sign up and click to sign up. So just keep that in your mind as I go through the video. If you're liking what you see, then yeah, definitely get signed up for the class or drop me an email. Now, a quick couple of clarification points here. First off, I will be doing the 30-minute time frame. So if you're new, all that means is each one of these candlesticks, as they're called, represents 30 minutes worth of time. And then next, the market is still open for a little bit. So that candle on all the charts we'll be looking at will still be moving around because the market is still open. But I like to do this because sometimes we can capture some really nice breakout movement or just interesting action in general. But from an overall standpoint, the market's close enough to being closed that, what I talk about is going to be relevant, on Friday regardless. But first one here, LGVN, what a monster move. I mean, think about this. Thing was down here at basically, we'll call it $3. Now today, up as high as $9, and a whole lot of people watching it, tons of volume. And I think the best part about it is a very, very well-established level, meaning I assure you everybody and their brother's uncle has drawn that trend line right there, and everybody's going to be watching right around, let's just call it the $9 mark. Now, guarantees don't exist, but my point here, is it plausible? Is it valid to think that a level that probably a whole lot of people are watching, that if the price were to come up to that area and then get the break up through it, that break could create a whole bunch of, call it a self-fulfilling prophecy, call it whatever you want, but it could produce a bunch of upside buying pressure and momentum. You probably have some shorts with their stop losses up above there. Yeah, not guaranteed to happen, but is it plausible? Absolutely. So in my mind, $9 is that key level to watch. Who knows? Maybe something crazy happens, and when you're pulling this up, you're saying, well, Clay, the price is already above $9. Well, in that case, how far above $9? And the further up above $9 would just illustrate, the amount of power behind that breakout, and, it would just set up that much more excitement, I'm sure, going into Friday. If you like to play more of pullbacks, then the key level to watch here, where you can see buyers stepped up several times, right down there around $6.25. So keep an eye on that. But overall, I think $9 is by far going to be that most watched level here on Friday. Next one, LCID, and I'm still not willing to call the chart destroyed. But is it starting to look shaky? Yes, the chart is officially looking shaky. The chart is officially has lost some of its bullish appeal, and that has everything to do with the fact that it's actually dropped down below that purple line there, which is the very well-known, very famous 50-period moving average. And even if you have a basic understanding of charts, I'm sure you understand that when that moving average is trending upwards, as long as the price is above that level, that's a good situation for everybody. But during that opening 30 minutes right there, you can see the price did break below it and then, went back down. However, the reason why I'm not saying that the chart's destroyed and it's game over is from an overarching standpoint, the price is still above the pink line, which is the extremely famous 200-period simple moving average. So from a overarching standpoint, the trend is still in the bullish direction. But again, that assumes you care about the big picture point of view, meaning if you're a day trader and you bought right there, or you bought right there, you bought this morning, and in any of those situations you wanted to buy and sell within 7 minutes, well then from that angle, sure, the chart looks really, really bad. However, assuming you definitely care about more of a macro point of view, then you can't say that the chart's totally destroyed because it is above that 200. Now, if the price crashes down through there, okay, at that point now, that's looking like a full-blown reversal. But yes, this has become a very big pullback, but a reversal, personally, I'm not quite willing to call it that yet because, again, the price is still above that 200-period moving average. Next one here, AMC, and pretty much the same general premise, what I just talked about. So I'm going to go ahead and get rid of that line there and do the first update here, but this update just based on a foundation rule in charting, which states when levels of support are broken at close below, they tend to act as resistance. So going into the day, that 4150 mark was a key level, but with the price now below it, you'd expect it to act as resistance. And that's actually exactly what played out this morning. Price broke down below it right there and then bounced back up. You can see got rejected there, bounced back up again. Generally speaking, got rejected there before rolling back over. So the point here being that if there is any sort of attempted bounce back in the upwards direction, then 4150 is going to be that first key kind of question mark in the sense of, all right, well, can the price now at least get back above that area and stay above it? So keep an eye on that. However, just like the one we looked at with LCID. Can you say that AMC chart's epically destroyed? It's game over? Absolutely not. Why can you not say that? Well, look at where the price ultimately found some support, started to go sideways, and got a little bit of a bounce. Well, surprise, surprise, right at that pink line, which you now know is the 200 period moving average. So yeah, things looking rough after today, but it's, in my opinion, way too dramatic to sit there and say, oh, everything's now totally destroyed. No. It's still above. It's still got that 200 period moving average. Now, if the price just completely separates and keeps going drop further and further away from it to the downside, all right, that's another discussion. But as of right now, that has not happened. So yeah, not a great day, but the price is holding on to that level, which is important. Next one, RIVN. And I want to keep doing this one because I don't want to say a lot of people, but enough people that I've seen are starting to feel nervous, and I understand why, because it seems as though the party is over for now. However, I'm not going to sit here and say that again, the chart is totally destroyed. So like AMC, we got to do the quick update. That update, once again, based on the rule, when levels of support are broken, they tend to act as resistance. There we go. So 140 now is going to be that main area of resistance. If there is any sort of attempted bounce back in the upwards direction, just goes about, okay, it's great that it's bouncing. That's fantastic. But can it break above 140? That'll be a level that a lot of people are watching and care about. However, at this flip side of things, you got to be very careful now that things don't totally spin out of control and, this pullback turns into a full-blown reversal. So right now, I would still call it a pullback. Yes, a very deep pullback, a very nasty pullback, but a reversal, I wouldn't call it that. However, the area where I would officially kind of change my verbiage into saying, yeah, this is no longer a pullback, this is officially a reversal, would be if the price gets down below the 115 mark. Not saying that'll happen, but from a verbiage standpoint, that's where I would transition from, yeah, this is no longer pullback, this is just a reversal. Now, I can see some people saying, no, Clay, it's already reversed. And I'm not going to disagree with that fully because I can understand where those people are coming from. But like I said, me personally, I think 115, give it a little bit more wiggle room because the fact of the matter is this thing has made a huge move. So yeah, it's got a bit of a pullback, but if you've traded long enough, I'm sure you've seen stocks where you think that the thing is reversed, but it's actually just a big pullback, and then the thing just skyrockets again. Am I saying that's what's going to happen here? Who knows? Nobody has guarantees, but like I said, I don't think it would shock anybody that has experience in the markets. So those are definitely going to be the main levels to watch moving forward. Next one, PLTR, and yeah, no need to beat around the bush. A very, very rough day. Talked about this a couple of days ago and that bearish pattern that had formed. So, is all this movement surprising people? I don't know if it's necessarily surprising people, but nonetheless, yeah, that bear flag that I talked about a couple of days ago turned out to be actually quite bearish. Now, did anybody know that it was going to be this bearish? I don't think anybody can say that because nobody knows anything, but I don't think anybody was really shocked or caught off guard by all this. But nonetheless, updates need to be done. That first update, you know where I'm headed with this. That level of support there at 22.15 was broken, so this level of support would now be considered an area of resistance with any sort of attempted bounces, so keep an eye on that. But now it just becomes a question of, okay, well, where are some of these next potential areas of support? And as you're seeing here, we are having to scroll back way into the chart's history because it's been a long time since the price been down around this area. But the next key overarching level of support, oh, wow, the price actually broke down below there. All right, well, going to be right there at, there we go, the $21.10 mark, which is a low from, let's see, way back there in late July. So like I said, been a while. And if the price does get down around 21, then, to be fair, there was a very impressive bounce last time it got down there. Does that mean that it'll happen again? Of course not. But is it at least valid? Is it plausible to think that, yeah, if the price gets down around 21, there could be some sort of worthwhile bounce? Yeah, that is a more than valid and plausible thought process to go through. But overall, yeah, definitely the bearishness continues on this one. Next one, NVDA, and I know this is a higher price stock, but there are always, the options market that exists. But you got to do something like this when you have such a well-defined level. So as I mentioned in other videos, and I don't know if I mentioned in this one, but I'm not trying to come across like I have a special talent or skill. This is something that I assure you, people around the world have drawn that trend line right there. And as I already noted, when a lot of people are watching the same level, call it a self-fulfilling prophecy, call it whatever you want. When levels like that are broken, it can definitely produce quite a bit of upside pressure. So like I said, there's going to be so many people that have drawn that trend line and are watching wondering, can the price come up here, break? I don't know, let's call it right around 320. And if it can, then it's not guaranteed, but it's valid to think that that could create, in technical jargon, a breakout, and then lead to that much more, upside momentum and buying pressure. So definitely keep an eye on right around that $320 mark. For those people that like to play pullbacks, let me actually squeeze this down here a bit more so you can get a better perspective. Near-term pullback area would be right down there where you can see several times the price got right down around 313.25 and bounced. But if you want more of maybe a deeper pullback, the next level could be that former breakout point right down there around 307. But all in all, any way you look at it, in my mind, the most interesting dynamic is just such a well-established, well-defined trend line right there. And you know a lot of people are watching it, so let's see if the break can happen. Next one here, CLOV, and I'm putting it back to back for the very same reason, so I can kind of just go through it a little bit quicker. But same exact premise here. I assure you, people that use trend lines have drawn that trend line right there. And same thing. So it's logical to think that, you know, if people are watching that and thinking, you know, if the price can come up that trend line and break it, you know, that could be some sort of sign of maybe a leading indicator of reversal or something like that. Maybe not a full-blown reversal, but at least a quality bounce. Yeah, once more, not guaranteed to happen, but is it valid? Is it rational to watch that level and see if the price can break above it, that could lead to a nice move to the upside? That is certainly a valid thought process and premise to have. So basically, just like NVIDIA, sure, this one's more so looking at a reversal from a, you know, a downside move, as NVIDIA would just be looking at a continuation pattern since it's already made the big move up. So a little bit different in that regard, but at the core, the same premise, well-defined, well-observed trend line. So let's see what happens if the price can break above it. Next one here, NIO, and full disclosure here, I don't know, you can let me know in the comment section. Am I trying to fit a square peg through a round hole? I don't know, but I think I see this pattern right here. So we have that pattern, and actually let me change that to green because that is more of the bullish part of the pattern, the support. And then we have the resistance part of the pattern right here. And to me, I'm calling that a falling wedge pattern, which I don't know why it's even called that, because you would think, oh, so it's a bearish pattern. No, it's actually a bullish pattern, whereas a rising wedge would be bearish. But in this situation, I'm seeing that a falling wedge has formed, but I am open to constructive criticism. Maybe you would disagree, and I wouldn't be, I can see that. But in my mind, I think it's well, let's do that. Let's call it a poor man's falling wedge. So a poor man's falling wedge, which is a bullish pattern. So it's just, like I said, the idea here is just, all right, getting a little bit of a bounce. Can this bounce continue enough to not only get up to the trend line, so that's question mark number 2, but can it actually push through the trend line? And if it can, then it becomes a valid thought process to have. Again, self-fulfilling prophecy, whatever you want to call it, that could create some nice additional upside buying pressure. So if you like to play patterns, then you have yourself a falling wedge here, a poor man's falling wedge on NIO. So it's worth at least keeping an eye on if you like to play those sorts of patterns. But yeah, definitely has gotten beat up quite a bit. So it always just makes you wonder, I don't know, can this thing totally reverse around? We'll see what happens. Next one here, AAPL Apple. And this is more so just kind of an overall, if you want to try to play and catch the beginning of potentially a new breakout in trend, because as far as, the current move, yeah, the big play was right there, right? You had that trend line, you had that pattern, got the pattern breakout today, and the rest is history. So, I mean, to just go and buy right now, I mean, I don't know, maybe you can justify that as, oh, I'm just trying to catch the momentum or something. To me, that seems like kind of just chasing the price. But the fact of the matter is, and the reason for this getting on your watch list is Apple has once again formed a very, very solid uptrend here. And I bring that up just because it is Apple, and over, the history of Apple, when it can establish and get breakouts and start to build uptrends, I mean, these uptrends can go for quite a while. Once more, does that mean that this is guaranteed to happen again? Absolutely not. But is it a plausible thought process that, yeah, you know what, this uptrend here could just continue to build and build over the next several days and weeks? Yeah, to me, given Apple's track record of past history, that seems like a plausible thought process to have. So if you do like to play trends, then that's where this, stock more comes into play. Again, I'm not suggesting that you just go and buy it, right? I mean, like I said, maybe you could, but just kind of more of an FYI that, yeah, got a very, very nice pattern breakout today. So the big question mark moving forward is just, hey, is this the start of something much bigger? Is there going to be now a trend that really begins to build itself? We'll see what happens. Next one here, CEI. And this all goes back to, the whole idea of, what was your perspective going in? Did you care about things from a day trading perspective, from a bigger picture point of view? Because, yeah, there was a pullback today. I'm actually just going to go ahead and get rid of these lines as I've served their purpose for now. But if you were a day trader and you bought right there on the gap down, you thought, I'm going to buy the dip here because this thing's heading right back up and I'm buying sell within 10 minutes. Okay, well, from that angle, you were wrong, and the chart looks really, really bad right now. Now, if you care about things from the big picture, yeah, no doubt about it, a big pullback here. However, when you look at where the lows are, specifically, I mean, look how it bounced right off that pink line. The 200 period moving average shows up yet again in the top 10, but beautiful example of that. But when you look at, that base right there and compare it to that base, and if you envision those as stair steps, from a macro point of view, you still do have stair steps progress in the upwards direction. Again, I understand if you're a day trader and you bought right there, you're right there, you don't really care about these stair steps. But from a bigger picture point of view, even with the nasty pullback today, CEI does still have the opportunity to continue to build an overall uptrend. So right around this $1.20 mark is going to be very, very important, because if the price goes to $1.20 and then breaks down through there, now all of a sudden you have the problem of, oh, great, the price has now started to go right back to where it was. And I mean, not to insult your intelligence, but price movements with genuine power, are not going to go back to where they were, right? They're going to make some sort of progress, and that's what that $1.20 mark is representing. But overall, depending on your strategy, the chart's actually hanging in there and still has an opportunity to build that higher base. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about this tool and how it can be used, how it should be used in order to build consistency as a trader, then definitely get signed up for the class. Or like I said, if it's too last minute or you're seeing this Friday morning and it's already happened, then it will be recorded. And if you want a recording of it, just drop me an email, clay@claytrader.com, and I'd be happy to email that back to you. All I'd say is just a little bit of patience because, again, it's got to be recorded. Then I got to get it uploaded. So just keep that in mind. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to make videos like this, then help me out by doing two easy things. Hit the like button, leave a basic comment. Say hi. Give me a ticker symbol that you traded today. Give me a smiley face emoji. But those two things communicate to me that you enjoy these videos. And as long as I know people are enjoying, then I have no problem at all continuing to put in the time and effort to make them. So doing those two things, I thank you in advance for helping me out in the feedback department there. But again, if you want to learn more about technical analysis, how it can be used to build consistency as a trader, then definitely get signed up for the class or drop me an email. Everybody take care. Have a good one.